Hello traders, today we want to discuss a practical Elliott wave forecasts. Practical Elliott wave forecasts. The financial instrument that we will be analyzing is NVIDIA Corporation, EPIC November Victor Delta Alpha NVDA. This is an American stock listed on the Nasdaq 100. All right. Talking about a practical Elliott wave forecast, we have one example here when the stock is in the third Elliott wave, and we want to forecast the fourth Elliott wave and the fifth Elliott wave. All right. Before we continue, I would like to remind the traders that are watching our video for the first time that an Elliott wave forecast is an expectation, all right? It's not an exact science. It's a guide that we follow, okay, in order to make excellent trading and investing decision. So we are expecting a certain behavior in the financial market, and when that is taking place, we'll take advantage of it. But the price does not have to fulfill our expectation. So do not think that what we are saying here is exactly what will happen, but when it's happening, it has a high chance, so we can work with high probability, okay, events. So there is a high chance that what we are about to discuss may take place, but it's not 100% certain that it will take place. So with that mindset, we are likely to use Elliott wave, okay, like the professional Elliott wave practitioner, all right? And one more thing. The Elliott wave count is, okay, dynamic. What I meant by that, one step at a time. So with the price structure that we have on this chart today, all right, today is the 30th of October 2016. With that information, that's the wave count that we have, okay? So I recorded a video recently that I posted at 24 Stock Trader YouTube channel. The title of that video was a stock that defies gravity. All right. So this is about NVIDIA stock when I was performing a technical analysis. But when I was doing that, I thought that this stock, it would be nice for us to use it for practical Elliott wave forecast. All right. So let's get started. So last time we said that this is the first Elliott wave starting from here to this point here. Attention please traders. So oops, I'm moving some line which I do not want to move. This, oops, 1 second please, I'll get there soon. So this is the first Elliott wave. All right, in fact from here up to this point here, and we have a second wave that are represented here by the pink line. So first Elliott wave, second Elliott wave. We are now in the third Elliott wave. All right. In order to forecast, so at this point in time, is this the end of the third Elliott wave? It's a possible end of the third Elliott wave because we are at 314%. You see here, 314% Fibonacci extension level of the first wave. Because if the third Elliott wave is extended, the key Fibonacci level that we are watching are 214%, 314%, 414% level. So the price is now in the zone of 314% Fibonacci extension level. All right. This could be a possible end for the third Elliott wave. But remember that the third Elliott wave can push it. So if the stock continues to go up and it reaches the zone of 414, we'll come back again, all right, and talk about the real fourth Elliott wave. But because today, this is what we are talking about, okay, as we are looking at this chart today, if we assume that this is the end of the third Elliott wave right here. This is very important. So don't think that I'm repeating this just by mistake. I'm just saying it because it's so important to understand what we are doing here. We are assuming that the third Elliott wave is ending at 314% Fibonacci extension level of the first Elliott wave. But if the price continues to go up, The third area wave go to 414% Fibonacci extension level. For this video, for the objective of this tutorial to explain to traders how to forecast the fourth and the fifth wave, we will assume that this is the end of the third area wave. Understand now? Okay, let's move on. So now, if you assume that this is the end of the third area wave, in order to forecast the fourth area wave for NVIDIA stock, we will connect the high of the first wave and the high of the third area wave. So you see the blue line that I have on my chart here. That line is connecting the high of the first wave and the high of the third area wave. Okay? At this point in time, that's all we have. So this is about Elliott wave channeling. We are using Elliott wave channeling to forecast the fourth area wave. Then we will draw a line through the low of the second wave that is parallel to the first line. So the first line that we have drawn is connecting the high of the first wave and the high of the third area. That's the blue line here. We choose the low of the second wave and we draw another line that is parallel to the first line. So now we have a channel. With that channel, we can forecast that if the third area wave is ending here instead of ending at 414%, if it's ending here, the fourth area wave is likely to pull back to retest the edge of this channel. The method that we are using to forecast the fourth area wave here is what we call Elliott wave channeling. There are other ways that we can forecast the fourth area wave, but I will use only the area wave channeling in this case. So we will assume that the fourth area wave will find a support somewhere along the edge of this blue line, okay? All right, but it's not finished yet, okay? Because there is alternance between the second and the fourth wave. If the second wave is just a simple wave, if the second wave is just a quick fast wave like we are seeing here, it's just a straight line, yes or no, that's the second wave, there is a high chance that the fourth wave in this case is likely to be a complex fourth wave or a fourth wave that is extended over a period of time, which means the fourth wave that we're going to have here has a high chance not to be a straight line like I draw it on this chart. It may be a complex fourth wave, all right? It may take longer to finish that fourth wave because this second wave has been completed within 3 months, and that now, because of the alternance between the second wave and the fourth wave, there is a high chance that it will take longer for this fourth wave to be completed, and also there is a high chance that it may be a complex fourth wave. So what I've said so far is just an expectation, all right, based on the area wave principle, that there is alternance between the second wave and the fourth wave. By using the area wave channeling, we put a line here, and we are saying that the fourth wave is likely to end somewhere along this line. My recommendation to area wave traders that are following us on YouTube is this: once you draw the area wave channel as you did here, I'm doing here, is to use the measuring stick to measure the width of that channel, all right, and to project it a little bit down, which I've already done here to save time. So we measure the width of our first channel and we project it down. Because the fourth area wave is likely to be extended, talking about the time it will take, and it's likely to be a complex area wave, in my view, this fourth wave has a high chance to retest the median line of the second channel. So the first channel is the top one here. The second channel is this one here. So personally, I do not believe, I do not expect, all right, the fourth wave to stop on the edge of the first channel, but to push it down a little bit near the median line of the second channel. Personally. But based on the area wave principle, a lot of professionals will be expecting a move down to the edge of this first channel. But using market geometry together with the Elliott wave principle, I recommend to traders to watch also the median line of the second channel. Because of the alternance between the second wave and the fourth wave, we are likely to have a fourth wave that takes longer to form, talking about the time it takes, and also is likely to be a complex fourth wave. There are few scenarios that can happen. If you pull back like this to retest the edge of the first channel, we may see a bit of bounce. We may have a triangle here or blah blah blah. Price may consolidate a bit, retesting the level of $63 here, pull back, retesting the $63 level, few times, forming a kind of consolidation here, all right, before it will go up, all right. So 1, 2, 3, and then to retest the median line of the second channel before going up. All in all, my friend, understand that we are likely to see a complex fourth wave. It does not have to be a fourth wave, but this is our expectation based on the Elliott wave principle. So we know something. If it's happening, we have an edge. We are not surprised. We know that it's likely to take place, all right? And when we are prepared for it. That's the good thing. But if you are not prepared, you can be in trouble, all right? So this is what we are expecting. So based on the Elliott wave channeling, my friend, apart from my recommendation to watch the median line of the second channel, we will now focus the fifth Elliott wave. So we want to know how the fifth wave is likely to form after the fourth Elliott wave, all right? Because the third Elliott wave has exceeded the 161.8% Fibonacci extension level of the first wave, we now are dealing with an extended third Elliott wave. Therefore, if the third Elliott wave is extended, all right, there is usually equality between the first and the fifth wave, talking about the length. The length is we draw a line that is starting from the low. Oops. Wow. I move a line again. All right, leave it there. We draw a line from the low of the first wave to the high of the first wave. Yeah. In the direction of the price. This is about the length. See how I draw it? Following the price from the low. That's about the length of the first wave. So based on the Elliott wave principle, if the third Elliott wave is extended as it is here, there is usually equality between the first, all right, and the fifth wave using the length and the magnitude. So when I project that length, equal length between the first wave, that's the length, we project it at the end of the fourth wave. So when the fourth wave is completed, either on the edge of the first channel or near the median line, we'll use this length and we project it at the end of the fourth wave, to estimate how far the fifth wave will end. In this scenario, everything is pointing to the level of $77.30. Right? $77.30. This is about using the length of the first wave, and projecting it to forecast, the possible end of the fifth wave. But in practical trading, we also use what we call the amplitude of the first wave. So when we are talking about the amplitude or the magnitude of the first wave, we are talking about a vertical line that we are drawing from the low of the first wave to the high of the first wave. See how I put it here, vertical line, and then we project it at the end of the fifth wave. So as I'm doing that, you can see that it's just a little bit above that level of $77.30. All right. So this is a practical, wave forecast, market forecast for NVIDIA stock. The fifth wave has a high chance to end somewhere near the level of $77.30. Talking about practical, all right, you see now, practical area wave forecast. Now that you see that it's $77.30, which is where we are forecasting the fifth area wave to end, all right. There are other tools that a professional also use. You remember that? Computing the 61.8%. Okay. From here all the way up here, we compute the 61.8% and we project it at the low of the fourth wave to estimate where the fifth wave will end. But as I explained to you in this tutorial, I want to use only the area wave channeling and other area wave principle to forecast the fifth area wave. So, because that level of $77.30 is right here, and you can see that there is no far from the 414%, all right, Fibonacci extension level, okay? Now, the wave forecast that we are doing today is based on the principle that is based on the assumption that the third area wave is ending here, all right? But if the third area wave continues and goes to the 414% level, we will have to draw our line differently, which means we will connect the high of the first wave and the new high of the third area wave, which will be somewhere up in this region. Suppose the third area wave went up all the way to the 414% Fibonacci extension level of the first wave. Then we'll have to connect the high of the first wave and the high of the end of the third area wave if it reaches the 414% level. And then we'll draw another line that is parallel to that line, draw another line that is connecting the low of the second wave that is parallel to the first line. And then we'll do our projection as I'm doing now, okay? And then we'll also use the measuring stick with the length of the first wave to project into the future to determine the end of the fifth wave. All right? So this wave forecast is based on the assumption that the third area wave is ending here, but be aware that if it continues all the way here, we'll have to put our line again on the chart and forecast the fourth wave and the fifth wave. You have to understand also that we are trading first the market, so the S&P 500 is at a key resistance level, which is at 222.888, okay? All right, 222.888. That's the resistance where the S&P 500 is now. We are trading first the market. The market is at a resistance level. So if the S&P 500 start going down, it is becoming bearish. That will also influence the Nvidia stock, and we will see a pullback. The reason why I prefer the media line of our second channel is because that will bring the stock into the zone of 38.2% and 50% Fibonacci retracement level of the third area wave. So my expectation for the fourth wave is to be somewhere between at least 38.2% of the third area wave. So fifth wave, fourth wave in normal condition will end at the edge of the first channel like this, near the $63.04. Best, my recommendation, my preference will be near the media line of the second wave. Somewhere near the $57.85. All right. After that, we will use the length and the magnitude of the first wave, and we'll project it in the direction of the price to forecast the end of the fifth wave. By doing that, we know that it's coming near the level of $77.30. Does it mean that the stock will definitely stop there? No. The stock may reach this level because the professionals are watching also the level of $86 15, which is the 414% Fibonacci extension level. All right. The price, if we see the fourth wave like this and the fifth wave is underway, remember also the level of $86.15. Better watch out for the median line between the 86.15 and the 77.30. Somewhere in a zone of $81. Okay, somewhere in a zone of call it $81, call it $82. Okay. So first forecast for the fifth wave in a zone of $77.30. All right. They can push it to $82, even up to $86. Just remember that. All right. Just remember that. Okay. One thing also you need to understand is this. Suppose the fourth Elliott wave is ending right here on the edge of our first channel, okay? Which I doubt because of the structure of the first wave and the alternance between the second wave and the fourth wave. But sometimes you may not see that alternance taking place, all right? If the stock is going up, suppose it's going up, you see here, it's stopping at $77.30. The professional traders, though they know that this is a target zone which they will calculate, there are other ways that traders are trying to forecast the fifth wave, all right, computing the 61.8% and the 38.2% of the distance from the low of the first wave to the high of the third Elliott wave, and they project it at the end of the fourth wave to calculate also, to forecast also the end of the fifth wave. But as the stock, suppose the fourth Elliott wave ends here, and the stock is going up, okay? If it reaches this level of $77.30, professionals know that this is a target level, but they will prefer, if they want to sell, okay, at the end of the fifth wave. Where do you think it's better to sell? They will prefer to sell on the edge of the channel, yes or no? Though the target is here, in practical trading, professionals would not like to sell like this. Normally, in many cases, they will prefer to sell on the edge of the channel, bringing us to the zone of $82 and $86. All right? So, now we know the first wave is completed, the second wave is completed, the third Elliott wave is still underway. Is this the end of the third Elliott wave? If this is the end of the third Elliott wave, this is how we can forecast the fourth wave, and this is how we will forecast the fifth wave. But if it continues to go up, we will redraw on our line again, and we will forecast again the fourth and the fifth wave. One more thing before we go. A wave count on one time frame, okay, is just or a cycle on a monthly chart is a mini cycle on a higher time frame. So we are on a monthly chart looking only on a monthly chart, and we are counting waves on a monthly chart, okay, and we are forecasting, okay, the market looking at the market cycle on a monthly chart. All right, let's go to the yearly chart and see the bigger picture. So you see on the yearly chart, all we are seeing here, the price action that we were analyzing is from 2014. That's where I placed my vertical line here. You can see all the line that we were drawing on a monthly chart from first wave, second wave, third wave. We are here now, and this yearly candlestick bar. Okay, we are still examining this yearly candlestick bar. We are now in October, all right? We'll wait until the end of probably the third Elliott wave may continue, all right? For instance, may continue up to the end of 2016. So you may see a candle here that is tall, may continue bullish all the way up to 77. And then probably next year we will have the real fourth Elliott wave. So be aware of what we are talking about on a monthly chart, because we have a yearly candlestick bar here that is not yet finished. All right. So on a yearly chart, looking at this chart with what I can see on this chart, we see a consolidation in this session. All right, so there was a trend, a price pullback, and we see kind of consolidation in this session on the yearly chart, and now we see another move up. This wave count on the monthly chart is just a portion of a bigger cycle. All right, and the area wave count is dynamic, one step at a time. So if the price structure that we are looking on the monthly chart has changed, for instance, we see now, for instance, a sharp correction bringing the price all the way down here. Is that a distortion? Okay, then we will re-examine the price action and, okay, continue, okay, our wave count. All right. So I'm using today NVIDIA stock to give the first example for practical area wave count. I will be selecting another stock in the near future, and we will use another method to forecast, okay, the market. In that case, I may use, the magnitude from the low of the first wave to the high of the third area wave. We will calculate the 61.8% and the 38.2%, and then we will project it at the end of the end of the fourth wave to determine the end of the fifth wave. To summarize this video, the fourth wave is looking at the structure of the second wave. Due to the alternance between the second wave and the fourth wave, there is a high chance, not certainty, or this we are expecting the fourth wave, okay, to be either a complex wave and to extend, or which means to take longer time to finish. Talking about the time it takes the second wave to finish, there is a high chance that it will take longer than that in the fourth wave to finish. All right. Using area wave channeling, in theory, a lot of area wave practitioners will expect the fourth wave to end at the end of the first channel. I doubt it a bit. If that's the case, we are likely to see, if we pull back only to retest the edge of the channel, there's a high chance that we may see, okay, a bit of consolidation before the fifth wave. My preference is that I will expect it to push it to the median line of the second channel before running up. That would be reasonable for me. All right. One more thing. Because we are expecting the fourth wave to be a complex wave due to the structure of the second wave, professional area wave traders will stay away from the fourth area wave if they know that, or if they are expecting that the fourth wave is going to be a complex. So looking at NVIDIA stock and the structure of the second wave, there is a high chance, not certainty. So if it doesn't happen, don't think that, oh no, area wave doesn't work. Okay, it's a guide. Okay, so if the professional is expecting the fourth wave to be a complex wave, they usually do not trade that fourth wave, because they usually lose if they are trying to trade that complex fourth wave. To put it into you in a different way, it is quite challenging to trade a complex fourth Elliott wave. All right? So they will wait until the pattern is completed, until that complex fourth wave is completed, before they will attempt to buy or sell during, okay, the fifth wave. Because it's quite challenging to trade a complex fourth Elliott wave. The reason is that professionals hate to lose, and they know that there is a high chance they will lose if they try to trade the fourth Elliott wave. So you may say to me, Joe, what should we do at this point in time talking about practical trading? All right, it's very simple. That's a very good question. All you need to do at this point in time is to draw a line at the high where we are now. So there is a high here that is achieved, yes or no? Okay, that high can tell you the exact level. All right. That high is at $72.95. $72.95, or my chart is showing 72.81, but the exact level, 72.95. Draw that line. Okay, let's play a bit. Okay, so that's the line. So if the financial instrument is going to continue the bullish momentum, it must go above the prior high. Very important. So currently, this monthly candlestick bar, which is the month of October, is not yet closed. It will be closed at the end of 1 day more, just 1 day left. Okay, it will be closed on the 31st of October. All right, here it is. On Monday, it will be closed. All right. And then a new monthly candlestick bar will start on the 1st of November, all right, if the market is open. All right, now, you understand? So we'll draw that high, all right? So if you want to be bullish at this point in time, all right, that's the high. You want it to break above that high at the $72.95, pull back or display a bullish chart pattern or a higher low. But be aware of this channel. There's a channel here. You see the channel here? So it will be better at this point in time where we are to see a kind of pullback before one will attempt to buy. Remember that the fourth wave is likely to be a complex fourth wave, but if you want to catch the third in your way, if it's not yet finished and it's trying to go to the 414% zone, you want to buy above the 72.95. Look for a trading setup above on the edge and implement a top-down trading method to trade it without assuming anything. All right? So the third area wave is extended. It's also indicating to us that right now the market sentiment, okay, relating to NVIDIA stock is very, very bullish. Another thing that we can deduct from that is that the markets, talking about the markets, those who are trading NVIDIA stock, is saturated by the bulls. The dominant force is bullish. So if one is attempting to sell NVIDIA, it's a contra trend, and one needs to be very, very careful. All right? Very, very careful. Okay? I hope you have learned something for this tutorial, all right? I will put it to use to make excellent area wave forecast. As I promised, we will be looking at other financial instruments, all right, more and more, talking about practical area wave trading, using different methods that professionals are using to forecast the market, so you may see it clearly. We'll also use the internal wave, which I did one time with one stock, the internal waves of the first wave to forecast, okay, the fifth wave, the third wave, okay, and the fourth wave, all right? So, for instance, if you want to know how the fourth wave, the structure of the fourth wave will be formed, we need to pay attention to the first area wave. If you want to use, for instance, the first wave, the internal waves of the first wave, all right, to forecast the fourth wave, to see how the fourth wave will be formed, I'm going to color these two lines into pink, all right, so you can see clearly. So pay attention to the two pink vertical line, all right, here we are. So what I'm going to do, hopefully I can see them. I would love to see them on the daily chart, but I doubt it. I won't see them on the daily chart. I'll go to the 3 days chart. Hopefully, here they are. Okay, so in order to know the structure of the fourth wave and to forecast more the fourth wave, when we look at the structure of the first wave, you can see there's a first wave, second wave, third wave, a bit shallow. You see, it went a bit horizontal here before going up. So this is something now that will help us to predict, okay, the structure of the fourth area wave. But I will not do that today. As I promised, I want to use the area wave channeling to forecast the fourth and the fifth wave. But just stay patient. We'll be looking at different examples using different methods, all right, to forecast the market. Thank you for watching, and we will speak to you very soon. We are the TSTW SYS 008 traders, talking about practical area wave forecast. Happy to meet you all, and speak to you soon.